Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support to the California MBA, in large part so that we can continue to be that strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking our 2024 President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We greatly appreciate it. With that, I'd like to welcome today's guest, a friend of mine and somebody who's been on Connect a couple of times now, Robert Finlay, who's a partner at Wright, Finlay Zak. Robert, welcome.
Thank you very much, Susan. I appreciate the invitation and look forward to chatting with you.
Yeah, thank you so much. Like I say, you've been a guest on Connect before. Happy to have you back. One thing that the firm has been a big participant in California has been you're a huge contributor to our legislative committee, and for that we're very grateful. Michelle Mirzwa and Gwen Rebar are really active with us, and we're happy to have that. But I know you're also involved with the California Mortgage Association and the National Private Lenders Association. So can you share with our listeners some of the top legislative takeaways for California lenders this year?
Yeah, I'd be happy to. And first off, it's rare that we get to report some good news. Usually when we're talking about legislative issues in California in particular, it's usually bad news or challenges, I should say, for the industry. This year there was some tough stuff in there. Overall, it was some good things. Starting off with, there really weren't any huge bills that negatively impact the industry, which is great. And that doesn't just happen because no one introduces bills that are difficult. Instead, it's the legislative work that's put on by the CMBA and other related groups. You mentioned the California Mortgage Association and all our lobbyists that fight to keep the bad laws out of the industry. And so they were successful this year. There were also some positive bills that I think were passed that will help the industry, or at least not be as damaging as they would have been. So there's three real quick I'll talk about. First one is AB 2424, and this bill tweaks our foreclosure process in California. And while it does add some time to it and add some regulations to the foreclosure process, it is 1,000 times better than what was proposed the year before and what we thought was coming back again this year. So all in all, it's a net win. And the primary two takeaways are that a borrower who is in foreclosure, who's facing a foreclosure sale, can now get two 45-day postponements. First one is if they have a listing agreement to list their property, they can submit that to the trustee and get a 45-day extension or postponement of the sale. The second is that if they took advantage of the first part and listed the property, and then they actually have a sales contract that is sufficient to pay off all the liens on the property, they can get another 45-day extension. Well, no one wants to add necessarily 90 days to the foreclosure process, given all the time that goes into trying to work with borrowers pre-foreclosure and all the time that goes into working with borrowers during the foreclosure. An extra 90 days is relatively small compared to what it could have been. And we are really just dealing with borrowers at this point that have a listing agreement and have a sale in place. And so helping them avoid foreclosure and sell the property is obviously a good thing for everybody.
Right.
The second piece of it is that there is now, on the first foreclosure sale that's cried, there is a 67% minimum sale price. So when the sale goes forward and the auctioneer starts taking bids, if the property does not get a bid that is at least 67% of the fair market value of the property, then that sale gets postponed, and it only gets postponed about 7 days, and then the sale can go forward without that minimum sale price. The goal there is to prevent properties from going to sale with substantial equity. because someone's asleep at the wheel or no one showed up to bid on it or whatever it may be. So it's a short continuance, and there are some rails put in place regarding the fair market value. So that's number one, is AB 2424. And on that, as well as the other two I'm going to talk about, all go into effect January 1st. The second one is SB 1146, which is has two aspects to it. The first, and it's near and dear to my heart because I actually drafted the language for it, is the what we call the In Re Moon fix. So In Re Moon is a case we've talked about at various CMBA events over the years, over the last year or so. And in that, it dealt with the 10% usury cap that we have in California. And one of those exceptions that's used quite often to that 10% cap is if a loan is negotiated or arranged by a licensed real estate broker. The In Re Moon case came kind of out of left field and seemed to say that you cannot modify, extend, or do a forbearance agreement on a loan that was over 10% interest, where they use the broker exemption, without removing that exemption and bringing the loan up over the usury limit and creating a problem. So what a lot of lenders and investors were faced with was, well, I don't want to risk exposure, so I'm just going to not modify my loan, not extend the loan if the rate was over 10%. This fixes that. It just puts some simple language in there that says that the ongoing exemption applies if it's a new loan, a forbearance, extension, or modification. Really easy fix, but that passed, goes into effect January 1st. Very consumer friendly, but also helps the lender so they have options when they're dealing with the borrowers. And the second piece of SB 1146 is that it tweaks the Homeowner Bill of Rights in a very minor way. If you remember, the Homeowner Bill of Rights and went into effect in 2013, put servicers into two groups. The big guys who do over 175 annual foreclosures, and the smaller ones who do less than 175. What was left out was little moms and pops that don't qualify for the under 175 because they're not licensed. But they're, it's you, Susan, if you went out and invested in a trust deed, or if I invested in a trust deed and I do one a year, I would have to comply with the over 175 rules because of a glitch in the system, a hole in the system. So now, if you're one of those mom and pops that do 7 or fewer loans in a given year, you still have to comply with HOBAR, but you don't have to comply with the more onerous provisions that were intended for the big guys, those that are doing over 175. You just have to comply with the under 175 group. So those were two positive additions that came out of 1146. The last one is AB 3108. And this one's dangerous, but it's important for people to know that's out there. Effective January 1st, it is a crime for a broker to advise someone who's getting a business purpose loan to sign a certification saying it's a business purpose loan if you know that the proceeds of that loan are going to be used for consumer purposes, basically. And that's it's been a problem. There's some bad brokers out there, but also there's some really bad borrowers out there who will lie readily and willingly lie to get a business purpose loan because they could not otherwise get a consumer loan. So this makes it a crime for brokers or originators to do that. The second piece, similar, is if you have the borrower misrepresent that this is a bridge loan, 12 months or less, when in fact it's not a bridge loan, or it might be 12 months or less, but the proceeds are going to be used not for the construction of a new home or for the purchase of a new home. They're going to be used for some alternative purpose. So it's going to make brokers be more critical of their borrowers. And if they think the borrower is lying, either cover themselves through the proper documentation, or turn that borrower away and let them go to somebody else, or maybe they just don't get a loan. So those are the three new laws. It's AB 2424, SB 1146, and AB 3108 that I think are worth mentioning.
Yeah. It was a busy year this year, as they typically are in California. We get a lot of legislative issues headed at us, and yeah, we had a couple of wins. That one was not did not end up the way that we wanted, but always great to have partners like CMA and the other groups working with us to get this best results that we can. So you talked a little about what happened from a legislative perspective. What trends are you seeing in litigation right now for lenders?
Yeah, I mean, a lot of the same old stuff that we see, homeowner bill of rights claims. But beyond that, compared to prior years, what I would say is different is that we're seeing a lot more affirmative litigation or affirmative disputes on behalf of our lending and banking clients, especially on the uh, commercial side or the business purpose side. We're seeing a lot more actions to enforce guarantees. And that's not something that we hadn't done those for many years. But with defaults in that area up and values sometimes somewhat down on the commercial side, we're sending out demand letters to enforce guarantees and then actually having to file actions against guarantors. Generally speaking, that gets the guarantors' attention, which then brings them to the table, and we then work out some sort of resolution. Also seeing more receivership actions. I kind of had to dust off my receivership skills since it had been many years, but going in and putting a receiver in place to collect rents on behalf of clients. Again, we're generally talking commercial or high dollar properties, doing more of that. Also seeing a lot more just in general creative workouts on the commercial side, where we're putting, we're bringing in additional collateral, perhaps because we're not confident in the collateral that we have already. We're taking pay downs of loans to make sure that there's equity at the end of the day. But a lot more what I would call creative workouts, where the lender, the borrower's in default and the lender's willing to work with them to avoid foreclosure. But we do need something more. We need some money. We need some additional collateral, things like that. So that's something we're seeing a lot more of. And then the last thing is appraisal fraud. I think that there's been bad appraisals out there for a while. I think there's been inflated appraisals out there for a while, but when the rates were lower, loans were refinancing on a pretty regular basis. And so a lot of that fraud or negligence on the appraiser's part was being swept under the rug. Now that some of these commercial and business purpose loans can't just get refinanced overnight because the rates are higher, we're seeing them take back properties, and as a result, we find out the properties were not worth what they thought it was, what they thought it was worth. And so definitely filing some actions and sending demand letters and putting appraisers, insurance carriers on notice. And then the last area I would actually say is adding one more is title related issues. Similar to the appraisal fraud, I think we saw a lot of title mistakes go by the wayside or be swept under the rug by constant refinancing. Now we're seeing those title issues are sticking around. And so definitely making more title claims. And we're also having to sue certain title insurance carriers to honor their coverage obligations more than we have in the past.
Well, it's like definitely you can see how the market impacts what trend, what is coming up in the court system too. When, like you say, when it's times are good and everybody's originating, they're not as focused on some of these issues. And thank you for sharing that. I think it's interesting to kind of find out what's happening with lenders right now. Robert, we've been very fortunate to have you as a speaker several times at our Legal Issues and Regulatory Compliance Conference, which actually starts today at the Irvine Marriott. Still on time, opportunity for on-site registrations if you'd like to join us. But this year you're leading a panel discussion on the relationship between in-house counsel and outside counsel. And I'd like to see if you can share with our listeners maybe a little sneak peek of some of the key takeaways that panel will be discussing.
Yeah, I'd be happy to. I'm excited about this panel because I have been lucky enough to speak on several CMBA events, but generally talking about new laws or cases, and this one's a little bit different. And having been in the industry for 30 years and worked with lenders and loan servicers of all sizes, I've also been able to work with legal departments of all shapes and sizes. So I'm excited. There's going to be a nice panel with 3 in-house counsel. And we're going to talk about some of the things that they look at when it comes to hiring outside counsel. Also, what they look for as far as effective communication. But then in addition to that, I'm going to bring in my own kind of twist to this panel, which has been done in the past, is I want to talk about, as an outside counsel, how to effectively communicate and how to work with in-house counsel, because it's a two-way street. While often we hear that in-house counsel tell us what they want, I think it's important to establish for us to work as outside counsel efficiently and effectively on behalf of our clients. There's certain things we need from the legal department to help make our jobs easier. And I'm going to talk about some of those as well. So we're going to kind of a little bit of banter back and forth with the panelists, all who once were outside counsel like me, and have both, can share both perspectives from both sides, as well as my input. And I think it'll be a good give and take back and forth. I'm excited about it.
Yeah, you put a great panel together. I'm looking forward to it. Thank you so much for being a part of the conference again this year. You just mentioned, you've had a long history of a decorated career in the mortgage industry and legal representation for this market. What advice would you give somebody just starting out?
Run? No, I'm kidding. No, I'm kidding.
Don't join the legislative committee. It's too confusing.
I love this industry, and 30 years ago I didn't know I was going to be in it for so long. But I think it's the mortgage industry is a great industry to be in from the legal side. What I would recommend to someone who's just getting involved, and what I tell our young attorneys or a few people that I've been lucky enough to mentor, is networking. The importance of networking. And and to build it into your schedule now. A lot of young attorneys come out and they're so focused on their billing and hitting that billing requirement. And it's hard to do when you first get started. But build in the market, the networking now, because what happens if you don't is 5 years from now, all of a sudden you want to start bringing in business and you want to start networking. Well, first off, you're 5 years behind, behind in doing so, but also by then, maybe you have family, maybe you have a lifestyle you've built around your billable requirement. And the idea of adding 5-10 hours a week, whatever it might be, to that already, heavy workload is very difficult to do. So build it in early so that it's not something you're adding later on. I would also say is understand your clients and how they work, but also understand how the industry works. A lot of times when you first start off, you work on a case and you understand the legal aspects of that case. But I think it's really, really important to understand how all the pieces fit together in the mortgage space, how origination fits in with servicing, how a legal department fits in with the business unit, how investors fit in with master servicers and sub-servicers. Just understand how it all works, and it will make you so much more valuable to your clients down the road, and I think it'll help advance your career significantly.
I think that's great advice. Great advice for sure. Understanding the industry. I think that's really a great piece. Robert, you and the firm have been such incredible supporters of the California MBA. We're very, very grateful for all the support you've given us over the years, not only through membership, but as I'd mentioned, through participating in our conferences. You are great contributors to our legislative committee, which just makes us stronger. So thank you for all of that. Can you share with our listeners why you choose to support the California MBA?
The chance to work with you.
Well, that's the answer I was hoping for. You finally got it right. I asked everybody, and you're the only one that got it right.
In addition to that, of course, primarily, I think the legislative work that the CMBA does in protecting the industry is unparalleled, and it's so important. I talked about some bills that passed. It would have been so much worse if we didn't have the CMBA, CMA, and all the other industries out there, looking out to protect us. So that part I really like, and it's very collaborative. I enjoy that aspect of the legislative part, working with the various groups, banking and credit unions, and we're all working, generally speaking, on the same issues.
Right.
Second, I would say education. The CMBA offers amazing education at the conference we're having today, as well as other events over the course of the year. And then lastly, networking. I mentioned the importance of it to young people as they're getting started. It's important throughout your career, and the CMBA offers a great opportunity to network with, your colleagues that do the same type of work that you do, your clients, as well as potential clients. So I think networking is very important.
Excellent. Well, Robert, thank you so much again for being a part of the California MBA. And I will see you today at our Legal Issues Conference. Thanks for joining me today.
Thanks, Susan. I look forward to seeing everybody.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.